Hello, friends. So, our financial year has ended, and our markets in the last 1 year has not done very great. But if you look at, it's from last 6 months, which is October 22, is what market has been underperforming, the emerging markets. And the main reason for that is not local, it's basically the global positioning and the relative valuation of Indian markets has been pulling Indian markets down. If you look at from the domestic point of view, our economy has been doing good. High frequency data, if you look at in terms of traffic movement, GST collection, which is at record high, or the manufacturing PMI, is suggesting that there is a high level of activity. In fact, our export number has crossed $7 billion for the 11 month ending February, and for the full year it is expected to cross $750 billion, which is a record high. So this suggests that there is a high level of activity, and that activity should translate to the corporate profits and margins. And as we are entering into the result season for Q4 FY23, we are going to witness some margin expansion, especially driven by financials. More so, if you will look at that, the trend of margin downgrades, which was witnessed last year, I think that will get reversed, and I think that will cheer up the market. At the same time, if you look at the relative underperformance, which I was talking about to the global markets, which was going on since October, seems to have reversed in the month of March, which is after 3 consecutive falls. March was a positive closing for the market. At the same time, FII's number, which was continuously selling since November, have seen a positive purchase. So, if you look at domestic FII's flows, and also not to forget that the RBI also has paused the rate hikes, and this all will have a positive impact on the markets, on the operating margins of the corporates. I think that will help market do well in the near term. If we talk of the pause by the Reserve Bank, though they are mentioning it's a temporary pause, but looking at the global scenarios, especially the situation which has emerged after banking chaos in developed market and the inflationary trend, it looks like RBI may not hike any further. However, any decrease from here, I think will take time, because they will like the inflation to become more stable than what it is right now, and which, if you look at from the fixed income point of view, makes sense to be in the belly of the curve, which is 2 year, 3 year, 4 year, because this scenario of rates holding on will lead to the steepening of the curve, and which should help the funds which are focusing in that area to take advantage of it. But overall, if we look at the larger picture, I think overall it is good for the economy in terms of the margins, as I said, especially the financials, which were under pressure for last 2 months, because market was expecting that the liability cost will go up, and hence the margins will be under pressure. I think that has been arrested, and that should help overall market. So in summation, I think in the view of where the economy is doing, the way India is placed relative to the world, and the interest rate scenario, I think Indian markets look well placed, and in near term you should see some positive buoyancy in the market. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.